Let's do a quick sound check here in the free room and over on YouTube. But as always, hope you all had a good weekend. Hope you are good and rested, because I'm hoping we got a few good days of trading ahead of us. Good morning, Miss Lorna. Good morning, Turbo, Mirza, SR, Jim. All right, the whole gang is here. Peter in Vermont. Peter, I don't know if you're up in Vermont right now, but we're getting some of that good spring weather over here in Mass. All right, guys, let me clean a few things up here, and we will jump on in. But yeah, I waited all weekend for the futures to and do a whole bunch of nothing. I think JC would call that a big nothing burger. So I was kind of hoping the futures would be a little bit more lively, and then maybe we could have looked for a few trades together. But we'll keep an eye on that. So as far as the bigger picture, all right, we got all these big squeezes on the weekly charts, the daily charts, and I think from here the question is, do those squeezes fire to the upside? And do you get continuation of what has been a pretty good move here over the last call it 2 to 3 weeks? So for the NQ, all right, we know the weekly squeeze actually fired along 2 weeks ago. So this will be week 3. And then over on the daily chart, you have my favorite setup in the world, which is a daily squeeze and a daily buy signal. All right, so all pretty on the bigger picture. And then for the spiders here, everything kosher on the daily, but we still have the big weekly squeeze here. Still coiled up looking for a big push. Now, keep in mind, your big level this week is going to be the same level that I gave you last week. 4,200 on the S&P futures. It's not only the previous swing high, it's also the weekly trailing stop. So if we can break through 4,200, and if you can get a positive shift of that trailing stop, then the probability suggests a weekly squeeze actually fires to the upside. And then I think we got a bit more gas in the tank. So point being, things still continue to look pretty good here. On a weekly chart, on a daily chart, the bulls have got all the pretty colors for now. Now the problem with all of that is the stage is set for a nice push on these bigger time frames, but if you go down to, say the 4-hour chart, right, good looking weekly, good looking daily, all kinds of things to like on the bigger time frames, but we're caught in a paper bag. You got your resistance, you got your support, and all of last week they did the same thing over and over again. All right, let's flush it down to support. Let's print the sell signal across every time frame imaginable. Let's poke our head under support, right? Get everybody leaning short, and then they pop it right back into the middle of the range, and then they do the opposite. All right, here comes the bulls, and we've got 1 hour, 30, 15-minute buy signals. All right, everything locked and loaded. Take it right to resistance, and then right back in the middle. All right, we're basically just playing ping pong here in the paper bag. Now, one thing that I do like, that for now does kind of lean towards the bulls finally breaking this range, is you got a fresh tank of gas down here on the 4-hour histogram. So as far as like the ebbs and the flows, back here you're in a big 4-hour squeeze. You're above your trailing stop. But to me, most importantly, a fresh cross down here on the histogram. All right, the stage is set for a big push higher. The squeeze can set the stage. The structure, the 8 crossing above the 21, the trailing stop, all of that can set the stage. It's your momentum that can actually trigger that move. So fresh tank of gas. Nice push to the upside. But then when you get the break in momentum, which lasted for what? 2 or so weeks. All right, 2-week break in momentum, and we go absolutely nowhere. All right, caught in the paper bag. So though we continue to be stuck on the range this morning, what I do like for now, As far as, edge for the bulls is the fact you have a fresh cross on your 4-hour MACD and the fact the 4-hour squeeze is actually firing to the upside. So if they can take out the highs here, we should get our next push higher. And then on the S&Ps, it's the same paper bag song and dance. You get a big bad weekly squeeze, you got daily buy signals, but we've been a little bit caught here, and you'll see the same thing. 4-hour squeeze sets the stage for a push higher. Momentum gives you the push higher. Now, a break in momentum doesn't mean we're going to fall apart. Doesn't mean it's a shorting opportunity. But what this tells me is, all right, the easy part of that move, all right, that first initial thrust off the bottom, done and over with. Doesn't mean we're going to look to get short now. But if anything, we should be ready for a total chop fest, right, until, again, you get a fresh cross. So I do like that for the futures. 4-hour squeezes, 4-hour buy signals, positive shift in the histogram, and they're hanging out above their trailing stop. And I show you that to say, if anything can, pack the punch needed here to actually break out, could potentially be a 4-hour squeeze firing to the upside. So that's a little bit on the bigger picture there. Now, for those of you in the options room and the mastery, we got a couple put credit spreads on the QQQ futures. And we'll need a little bit of a pop here to get filled for some cashola. So there's a bigger picture. As far as a few charts that I do like, I like gold, but I don't like it. I like everything about the structure. I like everything about the squeezes. I don't like is that gold won't pull back and give me, I might have spoke too soon. So for the first time in a while, this actually kind of gets attractive for an entry. Let me check GLD. See if we got any big divergences. I'm going to keep a very close eye on this week. So remember on gold, what I'm really liking here, he's got this giant. So look at this monthly chart like you would look at your 4-hour, a 30-minute, a 15-minute. Right? It's a bigger time frame, which means things can be a little bit slower to unfold, but the same rules apply. Meaning if you're in a monthly squeeze above your monthly trailing stop with a monthly buy signal and a fresh cross in momentum, well, just like that combination coming together on a 15-minute, a 5-minute, or a 30-minute, that all points towards the squeeze wants to fire to the upside. All right, and then the rule of thumb is 15-minute chart, 2-minute chart, weekly chart. Once the squeeze fires, we're usually going to look for a good 8 to 10 bars of momentum. So on a 1-minute chart, that's a trade that might it's a trade that might last for 5 to 8 minutes. On a monthly chart, it can pack a punch. So that's what I'm liking here. All right, squeeze. We held the trailing stop. Finally get a brand new monthly buy signal. But very much like the 4-hour chart of your S&P futures or the 4-hour chart of the NQ we were looking at, you could kind of see the ebbs and the flows here. A squeeze with a fresh tank of gas, right, that leads to the easy part of the move. The break in momentum, while it doesn't necessarily make it a great shorting opportunity, if anything, usually implies we're going to go into a total chop fest. Right? Easy part of the move. And this is kind of a tough buck, right? That's a hard dollar. But now with a little bit of a shift here, right, a little bit of gas in the tank, I think there's a pretty good chance the monthly squeeze here can fire to the upside. And the fact that you're getting a monthly squeeze right under the highs, to me, it potentially makes it an even more explosive dynamic. Where if you do take out the highs, there's There's no ceiling, so to say. So gold looks pretty good, and then I don't think I have the earnings calendar still up. But keep in mind, as far as like the Microsofts, the Teslas, the Amazons, all your individual stocks coming up on earnings here. So if memory serves me correct, got a few big banks this week: Bank of America, Goldman, I believe Morgan Stanley. And then as far as the sexy stuff, I think Tesla's going to be Wednesday. Yeah, Tesla's Wednesday the 19th. And then next week is the big to do. Next week you get Amazon, Microsoft, Apple, all the heavy hitters. So usually for me, if we're 1 or 2 weeks out from earnings, going to shift a little bit of the focus to just trading the S&Ps or the QQQ, which is kind of been the focus as of late, anyways. That's what I got for you guys as far as the game plan for the week ahead. I don't see any warning signs here. I don't see any huge problems. I don't see any red flags. What I do see, at least on the cues here, is my favorite setup ever. I love nothing more than a daily squeeze of the daily buy signal. But we're coming to learn. It's this time frame just sets the stage. What's actually going to determine whether or not that daily squeeze fires to the upside or the downside is everything going on in your lower time frames. And the biggest thing that I see on your lower time frames right now, for both the ES and the NQ, are these 4-hour squeezes pretty much right under resistance. If they break, and if they fire long, then I think you look for the domino effect. 4-hour squeeze fires long. That triggers a nice push. That nice push triggers your daily squeeze to fire long. Right? Kind of that domino effect. But the opposite is also possible. The opposite being they break short, take out support, and then down we go. And then the third alternative, which I don't know about all of you, but personally for me, the third alternative is my least favorite. We could just keep on bopping around here in the paper bag. All right, here comes a big 4-hour squeeze. You got your buy signals. Here comes the breakout, and we kind of fizzle right back in towards the middle. And then here comes the big short. Here comes the end of the world, and they pop it. And then here comes Friday afternoon. The market closes. We've seen 1,000,001 different directional moves, and we've gone nowhere. The nasty, nasty third alternative. Yeah, Andrew, I guess sexy is a subjective thing. like all things in life. But as far as my earnings calendar, I don't have Bank of America marked off as sexy. Although maybe this time around, rumor has it the banks have been in the headlines a little bit. Who was it last week? Was it JP? Somebody came out first. Yeah, JP. So maybe that sets a tone here. Maybe the trade of the week is buying out the money calls on Bank of America before earnings. But all right, my friends, that's my game plan for the week here. Things are a wee bit choppy ahead of the open, but we got a fresh 5 days ahead of us, so I'm looking forward to it. But yeah, if you got any chart requests, any questions, anything you want to take a look at, throw it on at me, and then I'll be in the open. I'll be in the gold room for the open. Unbelievable. You wait all weekend. All weekend for a big goose egg. Hey, what's up, Ed? Any thoughts on the semis? So a couple things I'm seeing in NVIDIA and AMD. We'll jump back to SMH. And like I mentioned, I don't think this I don't think it makes something a short. But for NVIDIA, you are getting that break here in momentum off of your daily chart. So what that tells me, if anything, and frankly, for me, it's kind of ideal, right, is the break in momentum doesn't mean NVIDIA has to fall apart. It's probably ideal for the market that it doesn't fall apart. But what that tells me is for now, right, the easy, explosive part of that move, probably done and over with. Right, the bulls pull into the gas station, fill up the gas tank. They drive a good 300, 400, 500 miles. Right now, the gas light is coming on. Well, as long as that gas light is on, before we can continue our journey down the road, we got to pull over and refuel. And a lot of times, pulling over and refueling, quote unquote, just means chilling out near your 21, chilling out above that trailing stop, and a lot of times printing a brand new daily squeeze. Right, big push higher, consolidation, we're taking a chill pill, brand new squeeze. Well, from here, if momentum can begin to turn the corner again, and they start to fill that gas tank, then you look for your next easy push. So that's my biggest observation on NVIDIA. It's my biggest observation here on AMD. And we talked about this a little bit last week where, not every daily squeeze is created equal. Got a daily squeeze right now, and you had a daily squeeze back here. We'll put every other indicator aside. Just focus on these two. Well, the difference back here was the bulls had a fresh tank of gas. And right now, the bears have a fresh tank of gas. I'm not going to look to short AMD, but I'm not going to position myself in a bullish trade until momentum can kind of rebalance here and start moving back in the favor of the bulls. So as far as SMH goes, a little bit of the same, right? Which to me just points towards, hey, it might be a little choppy for a bit. All right, I don't want to get short in here. We're up, we're down, we're up, we're down. What I want to do instead is say, okay, what's the bigger picture? Right. Are we behaving like an uptrend? Are we behaving like a downtrend? Well, here's your first big push higher with your fresh tank of gas. Then you get the break in momentum, which a lot of times in the strong uptrend will eventually lead to a brand new daily squeeze. Right, it's the ebbs and the flows. Brand new daily squeeze, fresh tank of gas, big push, break in momentum, brand new daily squeeze. So from here, if momentum turns the corner, breaks back above that zero line, then you look for your SMH, your AMD, NVIDIAs to keep the party going, which for me personally is a trade I'm going to look for. I've been wanting a little bit of NVIDIA, AMD. Now they're finally kind of back where, if things can start to shape up, a nice swing entry gets really attractive. So I'm digging it. I'm digging it. Yeah, taxes due tomorrow. Option seeker. Taxes due tomorrow. At least that's the suggestion, right? I think it's frowned upon to ignore that one. So yeah, make sure you get your taxes done, guys. Not my favorite, but it is what it is. Usually I pour out a little shot of whiskey or something when I get my tax bill. Kind of ease the easy emotions a bit. Earl, how am I positioning for debt ceiling issue? Earl, to be completely transparent, I'm not even too sure what you mean by that. So that strikes me as something that's probably a good question, but probably a better question for a JC or a Sam over in the options room. My knowledge of anything outside of the charts, so the macro, the economics of it, all that kind of stuff, my knowledge of that world is pretty limited. So for better or worse, I like to pretend I live on a stranded island, and I've got no access to the news or economic reports. The only thing I got access to is just the charts in front of me. So things of that nature are a little bit above my pay grade. But a guy like Sam, a guy like JC, they're pretty knowledgeable when it comes to that kind of stuff. But all right, guys, one more look here at these riveting futures. Our stocks are getting blown off here by the action. S&P futures are dead flat. Woo! DNQ, we'll call that dead flat as well. The rut. Come on, rut, give us something here. There we go. There's some life. There's some outperformance. The rut is up a third, and the Dow, and all 30 of the Dow stocks. Yeah, we'll call that flat too. But all right, my friends, let me check the calendar here. I should be back today though in the free room. Let me see. Monday the 17th. Yes, sir. Yeah, awesome. So I'll be back in here today at 1 p.m. Central, 2 p.m. Eastern. So for those of you in the free room, looking forward to seeing you then. And then for those of you on YouTube, be sure to head over to simpertrading.com and sign up for the free room. I'm in there, I think, 2 or 3 times per week. You got Henry in there a couple times, Sam, Cody, the whole gang. But all right, my friends, have a good day. Wish you all the best of luck this week. Make it a good one, and I'll see you in a few hours. Adios.